Okay, we are live. Prospero.Ai stock market live stream. We are live streaming every Monday at 11 a.m. Thank you for joining us, and Wednesdays at 3 p.m. Happy to see some people in here today. If you have any questions, feel free to ask. We're happy to answer. But to start, we're just going to let George give us his market update and how he's feeling on this fine Monday morning.
Yeah, I'm gonna get us up to the second uh, QQQ and SPY net option sentiment because there's been some interesting movements, I'd say, on both of those. Let's do that quickly. Uh, all right, yeah, down at 16, which is higher than open QQQ, and SPY net option sentiment is at 12, which also looks higher than open. So we do have some positive momentum upwards. I would say overall, obviously there's some pretty concerning bear movement that we've been talking about, especially in what I'm seeing in the CME Fed Watch, where we talk about the implied probabilities of rate hikes and reductions. And the big thing for me that I was concerned about on that was that um, basically what we saw towards the end of the week in just a few days was a substantially reduced, almost 20% for the next three meetings each, um, risk of a hike. So basically, we're seeing the market generally agree that economic conditions have added up to a point that we won't get a hike from Powell, which is very interesting, especially with Powell saying last week that he expects inflation to be more persistent. So those two things in combo are basically adding up to what I'm reading at a lot of concern for this week's tech earnings. And we've been talking about it a lot. And as we've also talked about, that there is, essentially a lot of times institutions can short things going into earnings to get a better price because they actually think they're going to be good. So we do want to watch out for any of these companies, and I'd say tech as a whole, any kind of rebound leading into the earnings. But even then, it could be just like a little bit of a bounce. Some people looking for potential value before those actual announcements. But I would say just the overall behavior of seeing the probabilities of a rate hike reduced, and then a few bad market days to go along with that. That in isolation is a pretty concerning signal. Then, as you see, like our SPY and QQQ option sentiment, especially QQQ option sentiment, running very low for it in terms of how we ever see it. We frequently see SPY net option sentiment in between 0 and 10 and any kind of bear risk market, but seeing QQQ net option sentiment open at 10 like we did, go below 10 like we did last week, um, that is kind of also a concerning signal on its own. The fact that we're kind of seeing both of that together makes me, pretty highly concerned about how these tech earnings are going to go this week.
Yeah, so we have the biggest companies in the world reporting this week: Apple, Microsoft, Meta, and Google, which is 30% of the S&P 500, including the other ones that are going to report. So, um, how are you feeling specifically about those four companies? Do you have any insights or things you want to share about anything in particular?
I think when we talk about Google and Meta, I think we frequently kind of have the same refrain, which is that uh, we think that those are undervalued companies for future earnings. They're both trading at under 2024 PE ratios. And, if you talk about Microsoft, up closer to 30, Tesla and NVIDIA have been closer in the 60 range. So, we definitely see those as value tech investments, especially when we see that kind of the reasons and always the same reasons they're underrated. Well, Google now is underrated, I think, because Microsoft, OpenAI, things like that. But still, I think people really discount them as an AI leader, and we've kind of seen that play out as we've been talking about it since that OpenAI acquisition. Um, then, I think Meta, they're like constantly overrated. Reels is coming on strong versus TikTok from, where they were just completely behind. And Meta's very good at doing that kind of thing, making sure that they're not losing market share. Um, uh, Overall, like in terms of users, even as these new entrants come in, sometimes that means, like in the case of Instagram or WhatsApp, acquiring users. acquiring companies to keep that market share. But just looking at Meta overall, and this is kind of how you have to look at companies if you're doing the right kind of diligence. It's that essentially what we're seeing with them is that they actually grew, other than the big growth companies, Tesla and Nvidia, they actually grew the third most of the rest of the big seven. So I think that is where in the last quarter we're talking about. I think that is where they really get underrated. Like, you could talk about like all of these businesses having threats, and businesses always have threats. The bigger your business, the more you're going to have people coming through your territory. But when you look at places like Meta and Google, Google is like, I don't take the threat as legitimately because they are still the best, brain AI company that exists because of their investments in science and tech. So, at the very least, I'm not even saying like, oh, Google should definitely be worth more. Like, I'm definitely saying that it shouldn't be worth less. So Google is a better buy than Microsoft, pretty much categorically as I see it. Um, and then Meta, when you get down to brass tacks, it does grow. It does grow consistently. And so as much as these like you want to talk about the actual threats are impacting the growth, not as much as threats in other businesses or just businesses that might be slowing down in their growth. So I think that like obviously you have Meta and Google as kind of like the strongest ones. I expect, both of them actually Meta more so. That's the first time I've ever seen short pressure go above 80 for Meta. So I am a little concerned for it and where earnings can come in. But in terms of like a 1 year hold, I really like those. Microsoft is going to be very, very interesting. And like maybe if you straddle events or do something like that, whereas you're basically playing volatility and taking a long and a short position, um, you might see those as uh, as a good play. But Microsoft, I really just have my concerns about like if they're not showing enough, kind of revenue increase from, especially like this OpenAI acquisition, but you see their costs jump up. And by the way, for those that don't know kind of like the back end of ChatGPT that well, um, it is costs a massive amount of money to run what you're seeing as these easy results. The cloud costs of that are enormous. So how long Microsoft is just basically going to be paying money to run that before it can actually become profitable, nobody even knows, because nobody even knows the real cost to run it. We do know very decisively that it costs a lot more than it's earning, especially right now. um, and then you have like the other side of it where you're asking yourself, oh, like why would OpenAI even sell as much as they did to Microsoft in the first place? Well, it was because it costs so much to run. And it's like a massive business to build, especially as it grew. And it's a lot of costs to shell out that Microsoft is much better suited for that business model. So working with someone like that is good. Trailing into Apple. Basically, I think that Apple, there's a big warning sign for Apple. And I think that's why, and we've talked about this, we see them talking about like a lot of potentially like, new products, new avenues, because the bottom line is their core products are not doing that well. And of the big seven, they're the only ones who saw shrinkage in that revenue, like the last quarter to a year ago quarter. So I think that is a big concern with Apple, and that everybody are going to have their eyes on that. And if they see another quarter in a row where they're seeing that year over year decrease, that could be a really big worry for Apple. And they could see like, especially in this like overly concerned bear market, they could see a pretty big price hit from that.
Yeah, so it's really interesting because as their, long-standing products are shrinking, I just saw a story about how kind of like how Microsoft is spending so much money right now in AI. Apple wants to spend at least $1 billion a year going forward trying to catch up on AI. So do you think the market is going to reward that or kind of get nervous by that with that much spending?
I think that's a very interesting question about AI. Um, and you might look at that as a save for Apple, being like, oh, like they actually made a big point of not, and actually I believe Tim Cook, I don't know, but it was just like, oh, they made a point of not using AI like everybody else in their last quarter. and that didn't go very well for them. And to me, this is like a big problem with Tim Cook Apple versus Steve Jobs Apple. It seems like they took that as a sign that they needed to like start moving into AI a lot more. And that concerns me as an investor. I like to see a company have its own vision. Like if Apple is like, oh, we're not going to mention AI, that's not like in our core competency, blah, 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 whatever. Like if they say that, that's like, that's respectable. If they can actually say, no, we have other places we want to spend our money. But to me, it's like the opposite of respectable. If you make this big point of saying that like, oh, we're not gonna mention this AI buzzword as much as everybody else because they're just basically saying it. Like there was something to that effect that they said. But yeah, if you then like come back the next quarter and like, oh, actually we are moving into this a lot. Like to me, that just actually shows that you lack vision and you're just being more of a follower as a company and just like doing what everybody else does. And that's not the way that they were built. They were built on originality, creating other products that other people didn't think of, that other people didn't have. And it's actually kind of sad for me to see them behave in that way coming from their legacy. Um, so that all being said, it could really help them. Like depending on how they phrase it, like I know like Tesla took a big hit when they said they were going to spend $1 billion on AI. So AI seems to be one of those things that everyone wants to hear talk about, like going out to a nice dinner, but you don't want to get the bill. Seems like how a lot of people want to think about AI. They want to hear it mentioned a lot, but they don't want to hear how much it costs to actually like engage in legitimate R&D for that kind of high tech endeavor. Um, so yeah, that all being said, I think that it could, depending on how they phrase it or integrate it or whatever it could. And that gets back to, I think, an interesting question about AI, whether it's something that, is kind of a race to the bottom, where like the number of these companies that share engineers, share ideas, understand like the functionality. And really like the thing about these LLMs, these large language models, is a lot of it is like the computers and the code doing so much work to say, you might say make free associations, solve problems, that it actually is less about like the skill in programming. When you had kind of like what were called like expert systems earlier on, you did have to have a lot of flow between like, oh, here's the code, here's how we have to fix it and make it better. And there was like a lot of lift for having like, very talented programmers. But I would say like the more that we actually see this stuff go into model complexity, huge models solving problems in kind of like an automated way that, due to the fact that the way neural networks are coded, we don't really like know exactly how they're solving those problems. So, yeah, I think that like that's actually a big part of it, that like maybe it is something that every business, the more it's like a race to the bottom and the more it is actually easier to build like comparable products, the more this gets open sourced, the more this gets like kind of like out there for people to use. Like there's a big model called Llama that is actually like code that you can like extract and build on yourself. That is like pretty similar to Chat GPT. So like from that perspective, I actually think it's pretty dumb for any company to not at least investigate generative AI, investigate large language models. So yeah, I would say like to pull that back out to Apple, they were pretty dumb to not at least be like, oh, we're investigating it last quarter, instead of being like, oh no, we don't do that. We're not getting like the cheap thrills of AI, where apparently like they don't get the cheap thrills of AI only last quarter, but now they're like willing to do that. It's kind of silly. Um, so yeah, obviously I don't love um that their path to this, but it could work out very well for them if they could get people excited about the products. But one more thing about like Apple AI that people that don't know the history about it that well, they released just like a god awful Maps product that they were going to try to like compete with Google Maps. That went very, very poorly. It was a bad product, and they ultimately like tried to back out. So part of me says like, okay, maybe this has gotten easier. There's enough coders. It's like standardized enough that like large language models and like the what they basically bring to anyone could help any organization. But it's not lost on me that they've flubbed, and Maps is an AI problem, that they flubbed an AI problem pretty royally in a short history of AI problems. So that's something that I'm also cognizant of. And we'll see. Like, I think regardless, if they don't show like recovery in their core business growth, it's going to be a problem for them. Whether or not it gets better or worse, like it's accentuated like that downside if they don't talk about AI in the way that people like it. Or I would say if other AI businesses aren't seeing the growth that people want them to see, yeah, either of those things could work out pretty poorly for them. But it might act as a barrier to recovery people if they make it interesting enough the way they're going to apply AI to a point where people are saying like, oh, maybe we do need to take them more serious as an AI player. That is probably why they're talking about it. I would say in case their um their core business shows another weak quarter, they're probably talking about that to lead up to, but hey, like we've got this new business in AI that we could, grow with.
Now, I have a question that I have to be honest to our audience. I didn't prep George for this, so he's going to be on the spot with his answer. So you have companies like Intel and like Cisco that were once the like biggest, best in the world, and now they're kind of dinosaurs. If you had to predict one of the big seven companies, 20, 30, 40, however long in the future from now, that's going to just be like a dinosaur company, which one would it be?
Oh man, that's tough. I think that like if you're talking about like dinosaur, like versus just like maybe like slowing down growth, maybe outside threats, I think the dinosaur is definitely Apple is the biggest risk because like I just don't see them like what do I associate with dinosaurs? People that like are like in a bad trajectory of innovation. And I think Apple is definitely, we've talked about it, they're in a bad trajectory of innovation. Whether they can certainly come back from that, no doubt. A lot of people have. But I look at that like where I like worry about the business, and obviously I've talked about that, is Nvidia, and obviously that's because they have such a massive like over 80% market share in the AI chip space. So I think that's like a real concern of essentially like what we're talking about, where it's like that's a very attractive business to invade, and even if um even if they just like go down to 50% market share, like not only will that really impact their stock price and how much like growth is like priced into their stock, um it also is just which is obviously huge. um it obviously will compel them to move into new businesses to like keep that growth going, and not just like kind of decline. And there certainly is hope of that, but we haven't necessarily like they moved into cloud a little. They like we've seen a little bit of that, but we haven't seen them being that great at moving out of their core business function.
So if you had asked me, I would have thought you would have said Microsoft. I'm kind of surprised that you said Apple.
Yeah, I mean, I think I think Microsoft, because they made the OpenAI acquisition and things like GitHub and Copilot, like they're showing that they're not great at our internal R&D, but they are good at acquiring companies on the upswing that have great R&D, and that is like that is a new thing. That's like Nadell, like that's something that he's done. I would say a lot better than the last management group. He's got his eye forward. Like they haven't figured out how to innovate internally yet, but that's fine because it's similar to what Meta does. Meta has never been good at innovating internally, but they depend on acquisition. So yeah, I mean, we definitely have seen that, and Apple has not really shown that.
Yeah, so speaking of acquiring companies, we had a big one announced today. Chevron is buying Hess for a total of $53 billion. And I think we saw this in Prospero, right? We had some signals.
Yeah, I mean, I didn't catch Hess because it wasn't as good in like upside breakout or anything like that. But I actually added Chevron to the model portfolio last week because it was looking particularly interesting. And believe me, I never see an oil stock and I'm like, ooh, I want that in there. It's got to look really good for me. I am a little bit like um, hesitant to add stocks that I just don't really like their businesses. Like, granted, like we added it. If the signals are there, they're there. But typically, something like net option sentiment is not going to be high enough in our filters to have that impact. But yeah, if you look in the app, you can see both Chevron showing a very interesting trend in net option sentiment leading up to the beginning of this week, as well as Hess actually showed an even bigger, I would say, and clearer and consistent trend up in net option sentiment. So definitely like we've seen in a lot of these news events, it looks like some people were playing the options markets ahead of this.
Now I'm one of the guys that gets stuck with my antique Hess trucks, and I guess I don't know. I doubt Chevron will keep making them, so maybe they'll go up in value.
Yeah, there you go. You've held on to them for all this time. You need this acquisition. Maybe this is your event. The Hess speculators will start to come in.
Exactly. Um, okay, so another story we got was that Okta had a security breach and the shares were getting crushed. They were down over 9% today. Um, and actually, it's weird because I think there's another company called Cloudflare, and when they've had hacks before, they haven't reacted this much. So maybe this one was worse for the company.
Yeah, I mean, the thing about these like all of these companies that I like LastPass for a while, it was actually really funny. My co-founders bothered me to join LastPass for like a while, and then when I finally did maybe a few weeks ago, they were like, "Oh, that one got hacked." But I actually think that there's a big issue with these like massive security, you might call them aggregators, which is just like you just become more and more interesting to hack the bigger you grow as a business. And I'm not sure that's viable for any business, to be honest. Like, yeah, I think everybody like, Okta's an auth, and everybody likes the convenience of like easier auth. And I was even talking to someone that I know at like a big newspaper who couldn't get in into her like portals and things where you can like automatically click into these other apps that like basically take your passwords and your auth with you through Okta. But that was actually shut down for that newspaper this weekend. So that's just like a really good example of like, yeah, it's nice, this convenience, this like easy, seamless security, blah blah blah. All that stuff is like pretty like nice, but I don't think we've yet solved the problem of like the more this security is aggregated, the more it seems to make these places targets. And like, I was actually talking to that person about like analogy between like, a safe and a business. And she was like, well, yeah, no, it's no different than like safes that always had valuables. But I was like, yeah, but like, it wasn't like a bunch of Fortune 500 companies like all sharing the same safe. That's like a very different proposition. And like, if you did have all these massive entities sharing one safe, we might have seen more people trying to like break into that. And obviously it's very different. And this is just an analogy. But like I do think that's like a very good point where I'm just like, I'm not sure we've solved this problem of and maybe it just needs to become more distributed. And I don't actually know all the nuts and bolts of that hack. But like whatever it is, I just don't think we found a good solution yet to basically saying like, oh, the larger these like security entities get, the bigger and better they are like as a target, as in a hacking target. And I'm not sure we'll ever really solve the problem of like making security that much better than whatever that like security aggregation bounty and windfall becomes.
Well, from what you just said, it makes me feel kind of bullish on cybersecurity companies because if the bounty always becomes bigger, people will always invest more in securing it, which would just lead to growth for those companies, I would think.
Well, yes and no, right? Like yes, like obviously everyone's projecting a big like cybersecurity like windfall. Like that's of course that's going to be a huge business because of the problem we're talking about. But what investors don't like is businesses on a cap that have a cap in size, and that's pretty much the concern I'm talking about. Whereas like maybe these businesses can only get so big before they're hacked or before like basically it's too interesting to hack into it. And that's never what like someone in the equity markets or anything want to hear, that there's basically like, oh, there's an amount that these businesses can grow where they're just basically going to get more and more interesting to hack. I think that that might be like a fundamental problem that we're touching on here. Granted, if someone figures that out, that's great, but it's like, do they ever figure it out, or like are they just not big enough and had like a bad security day where like it all ends up like blowing up. So I think that's like a big problem, and I'm certainly gonna the more of these like big places that end up having security breaches, the more I'm just gonna be like, oh, like maybe it isn't possible, and maybe like what I'm getting at, and I don't know if this exists. It would be interesting to like see a product, but like basically something that's just like so distributed that you're never really accessing all of the files. Or maybe it is like that already, but it definitely seems like in these breaches that it's not like that. And it definitely seems like these breaches are like, maybe like I think the last pass was maybe like 30% or like I don't know. But it definitely doesn't seem like these breaches are like so contained that maybe if you have like, these segregation areas of like, maybe you have like no more than 1% of the data in a place, it would be, less bad that way, less of a bad headline. Um, but I actually don't know enough about how these systems work to speak on that because maybe it's just like very challenging. Like once you get into a system, no matter how distributed um, you keep the data, that you're just in there and you can kind of like navigate around. Um, but I definitely think that these places maybe going forward are going to have to do a better job of locking it down and both like explaining how they do have a solution to lock it down, no matter how like big they get. But at the end of the day, my understanding of a lot of these breaches is they basically just get in through like a single employee that did something stupid. So like those like single point of failure problems um, are very, very hard to contain. Um, and like, yeah, it might just speak to the fact that it's just like, hey, maybe all I want is a small and highly competent cybersecurity firm to manage mine, as opposed to one that's just like growing and growing and growing and basically making them a more and more and more interesting target.
Yeah, so last thing on this subject. So if you were an Okta shareholder, would you be like nervous about the company going forward because of this, or would you just say it's a bad day and just, you know, they'll move on from it?
Oh, I'd be selling my shares. No, no problem. I mean, in a second. There's like there's a perception problem to this, right? Like everybody when you're like selling to them, everyone is concerned about security. And the last thing they ever want to hear is that you don't have your handle on it? Sorry, I just realized my laptop's not plugged in. There we go.
No, I don't know this, but like, do companies like Google and like the big mega cap tech companies have their own security within them, or do they outsource that as well?
Um, Both. I believe. Like they all have different policies. And I said I believe because 100% they all have their own IT. They all have like top-notch security, especially anything like keeping personal data. Like you're required to have like your own team that looks at it. But I'm sure all of these places like have as well. Like whether or not it's like full-time like outside cybersecurity or just like basically people that are hired to try to get into their systems. Like at the very least, they have that. They conduct tests where they're basically like paying like retired hackers essentially, uh, or just cybersecurity experts. But a lot of these experts, like, or a lot of these firms will like make sure um, uh, to be able to basically be able to do that. Like to just see if anybody can get into their systems. And obviously, the best people that get into these systems are hack prior hackers or sometimes active hackers that they're bringing on as consultants. Um, but yeah, I mean that's the smart thing. Like, and at the very least, you're required. Like, I mean, if you're say like a bank, you're required by law to like have people test your security systems that aren't you.
Yeah, it looks like we got somebody in the comments who was able to access their Okta from a personal laptop. So I guess they're back up now.
This is who I was talking about. But
I
maybe
thought
maybe
so.
it was user error over the weekend.
Yeah, could maybe Okta didn't have a hack. It was just that person. But moving on, I wanted to ask you about the Russell 2000 index because it has like drastically underperformed the rest of the indexes this year. It was hitting a 52-week low this morning, and I wanted to ask you: is that a really bad signal for the rest of the indexes that are going to catch up, or do you think the Russell is a buying opportunity? And just how do you feel about that?
I don't really think the Russell is a buying opportunity. I think that small mid cap stocks, especially ones like if you look at what is likely to make a stock a smaller mid cap stock, it's like probably growing. and not yet that profitable. Some are more profitable than others, but pretty much the most reliable, just so people know, the most reliable like stock performance indicator is profitability, earnings. Like obviously, like some of that is like how much is built in versus it is now. Like profitability is what drives. So most of the time, if you're going to have a big enough market cap to be in, say, the S&P 500, it's going to be because you are a very, very profitable company. So when you start going like digging down into the Russell 2000 or even lower than that, like you're basically talking about like companies that are like more in their market cap is probably more based on growth than profitability or the prospects of the companies. So those are going to be the easiest ones to hit if there's ever like any economic worries. So I think that's why, like, until we have this like problem sorted out, like basically what I'm saying, where Powell's like, well, yeah, like, we expect inflation to be like, more persistent, then, I think that is going to threaten, smaller cap stocks way bigger than uh, larger cap ones. So I think that is just like inherently the problem. And like, the challenge is in how we talk about some of this stuff and what's like very interesting, I would say, about this bear market, this market cycle. And traditionally, you're saying like all growth is threatened, not just like small mid cap growth. But because of like, like we talk about big growth stocks like, Nvidia and uh, Tesla, like because those are tech AI and growth with obviously some profitability, those are going to have a different kind of, different kind of cadence, different kind of outlook. And obviously, we're talking about like, the AI outlook is something that, we still think maybe we'll get some disappointing earnings this week, but still overall, it's something that we're very bullish on here. So yeah, I think that's a big difference. What you have in a lot of the Russell 2000 stocks are going to be, less profitability, more dependent on growth, but not necessarily touching AI in the same way that some of these other ones we love are. All right, should I tackle that question
Yeah,
before?
I was gonna say it's interesting you were talking about inflation. We have a question. Someone's asking, John is asking, is the $106 billion aid package from the Biden administration just for gonna bring back inflation?
Government spending um, is something that happens in every administration. Like if you actually look back on, the last three, Trump actually spent more than Obama. So the questions of like where like these aid packages or like whatever or support, like these have existed and the government has just been spending more and more regardless of who's in there. Now, the very interesting thing about this last cycle of inflation is typically corporate profits make up about 10 to 15% of a typical inflation cycle. In this one, it was over 50%. So, unfortunately, we are now dealing with a situation where it's actually like the way things like taxes and prices are set up for these corporations, um, that they're actually the largest cause of inflation. Because typically, like we would see them, and I think the big example is like these oil companies that are so like rich with cash right now, acquiring each other, blah blah, things like that. Like I think you would typically see prices tied much more closely to, you know, economic conditions. But actually, even in some of these tough economic conditions, like oil prices have stayed pretty high. And I think that's just an example. And we actually even saw the example of like cereal, where we saw like, yeah, a lot of people were like shrinking the size of the cereal boxes, like basically using inflation as an excuse to even raise prices more than inflation. So I think for any kind of aid package, where we're just seeing like, yeah, like the government just keeps spending more and more regardless of who's in the office. But what's different is actually like, and we could all speculate as to where this change is coming from, and there's probably tons of reasons. But corporate profits are now a way bigger impact uh, on inflation than they have been traditionally. Um, and that's a problem that I don't often see addressed, and I don't often see anyone talking about the right solutions for. And it's complicated, but I mean, basically, just what we're seeing, unfortunately, is corporations just like caring a lot less about keeping their prices low and keeping their prices like more affordable and just like taking any excuse to raise them and maybe raise them disproportionately. And I think actually like to bring this back to the way I think that the general conversations go with government is who's ever in office. Like there's so much like blaming of the person that's in office for anything that corporations just kind of like pile on. They're just like, oh yeah, the government's terrible. It's all their fault, blah, blah, blah. Meanwhile, they're raising prices more than inflation to increase their profits. And I think that that is probably the biggest ongoing inflation risk is that corporations I think are using the tense political situation to get more cover to profit more.
So, just responding to that, it would seem to me that at some point that strategy would backfire on corporations because they're going to raise prices so much that people aren't going to pay them and they're actually not going to be able to grow. Would that do you think that could occur and that's when the recession happens?
Well, I think they're pretty smart about it. Like even something like that cereal thing. That's kind of insidious, right? Because you're paying the same amount for just like a slightly smaller box of cereal. And I think that like that's like they're going to see what they can get away with. Like ultimately these are large optimization equations. And they're like basically like setting it up so like they can raise their prices a little bit and sell roughly the same amount of goods or they wouldn't do it. They're very sensitive to their profitability. I think basically what we're seeing is that they're sneaking these prices in to people and like most people aren't good enough with their budget to notice that it's happening. Um, and that's really like a problem. Like where it's just like I have no doubt that if it did actually impact their ultimate sales and their profits, they'd lower them real quick. But basically, what we're seeing is they're getting away with these higher prices and people basically like buying the same amount, and that's why we see things like credit ballooning, right? Because basically, like people are spending more and more because they're not necessarily doing the analysis and they're buying like what they think are the same amount of goods, but it's costing them relatively more. And that's how you run up credit.
Yeah, it seems like we've hit a popular subject amongst our viewers because we got another question from Anthony. Based on the government spending versus economy, do you think it's a concern that the interest on our national debt is going to exceed defense spending by 2025, or is it just a talking point?
Oh, I mean, I think the way that we're spending money and racking up debt is a huge, huge problem. And like there used to be like some thought to reducing it by like one or both parties. Like traditionally it's been more the Republicans, but both, as I said, they're both spending, more more and more money, regardless of who's in office. So yeah, that's a big problem. Like our country just can't keep like racking up debt and like passing the envelope. Like we actually like whether or not like whether or not it increases defense spending. Now, like defense spending is a hot button issue, but one thing that I drive home that is just like super important to me is like spending it in the right way. Like I think the Pentagon lost like $1 trillion, and like that's insane. We shouldn't, or multiple trillions. Like we shouldn't tolerate that. Like the story that I tell all the time about us building F-35s, like that the army said they didn't even want. Like that's the kind of thing that's just like mind blowing. Like and defense spending is like what is it our biggest tab, and that's why we're saying interest. Like so, the fact that it's like interest is becoming our biggest expense or passing like a massive expense that's like relevant. There's no doubt defense spending is interesting and important for a country that like pisses off as many people as we do. Now, would it be nice to piss less people off? Yes, but for the time being, we're pissing a lot of people off, and I understand why we're spending on defense, but we should spend it more efficiently, and that's just like a tangent. But like in terms of like the debt ramping up, that is absolutely a concern. And it should be something that both parties, like the parties like to spend money on different things. And what's more like relevant or important? I'm not going to get into that. I never touch that stuff. But what I will say is both parties need to start thinking about reducing their spend and like actually having productive conversations on how to become more efficient instead of like these weird like existential threats like we're going to cut Medicare, like whatever. Like it's like we're going to stop helping people because we can't like cut 10% of our budget in like a bunch of these areas that have probably become really wasteful and we haven't even examined the cuts. So, yes, I think at a certain point we are going to have to make like reasonable cuts across the board to a lot of different spending, or we're going to end up in a situation where we're going to have to start making unreasonable, unpleasant cuts. And like, unfortunately, the way that our government works is they're just willing to just be like, well, that's a later problem. We don't need to worry about that now. And that's how we end up having some pretty massive later problems, including just like for those that don't follow, like our crumbling infrastructure in this country. That's going to be a major that has been a later problem that is going to start becoming a now problem relatively soon. And Lord help us, because I don't think that our government is in any position to start solving big problems. They could barely solve small
Okay, so I want to ask you about so maybe why our politicians are so willy-nilly with spending and they don't know how to manage a budget is because that there's no financial education in schools. And I'm just wondering, like, do you have any kind of reason why that's not a required class? And what do you have to say on that as being the CEO of like a finance company? Like, I feel like we should that should be our mission at Prospero. Like, let's get a finance class in some of these schools or something.
ones. Well, I've got a number. Well, you didn't say that in the pre-meeting, but we are actually starting to work on something like that. But I'll get to that later. Like first of all, I learned accounting when I was 17. I actually like taught myself accounting to get my first hedge fund job. And like not only that, I still took it in college. Like why we don't learn accounting, like basic accounting or even like budget balancing is like beyond me. I think it's probably like because the government likes us to be in debt. Pretty much. Like that's pretty clear. And like the economy runs on this just like, spending your way into happiness that is the unfortunate cultural reality that we live in. But yes, I think that that's very intentional. I think there's absolutely no reason that we shouldn't get that kind of basic financial education, or even just talking about like, I don't even know, like, budget balancing, that's one thing. I don't know why there isn't like just like, oh, like this is like what you should do with your 401k, or why like companies don't that have 401ks don't actually like have required classes for that. Like, hey, we're gonna match, but we require you to take like an hour of class on how to like actually like allocate a year. Like that doesn't make any sense to me, especially when you have like programs like matching, why you wouldn't want people to be more responsible. But yeah, Prospero is actually looking at um, forming a charity or a 501c3. They tell me not to say charity. A 501c3 where we actually like help build learning resources and actually like use maybe even some of the signals that we've developed to help people like wrap their heads around these problems more, because yeah, it's like a real problem that like, what we actually say about Prospero in general, and one of the things that we're thinking about is like originally we thought that we would like have like address like intermediate retail investors and skew down to novice, but like, some novices. But now actually what we found is like it's actually like intermediate to advanced. And we actually have to like there is seemingly a considerable amount of like basic finance education that we need to help people with in order to even get them to the level to understand some of the concepts that we're talking about. And like some of that is, poor like what one of my core founders likes to say is knowledge empathy on my part, and he's probably right. I have no idea like what some people go through to learn these things, and it's our job to really help them. But yeah, I think that like what people like the amount that they need in terms of just like the basics, like here's your budget, here's like the right amount to spend on certain things, here's maybe some ways to allocate your portfolio. Like, of course, I don't blame people that are just like playing meme stocks um when they've not even gotten like a proper like financial education on like how to look at things like earnings or how to look at things like a company's like, revenue growth. Like even that, like how to like analyze it, look at that information is like foreign to people. But like what I'm saying is like they don't even learn how to balance their own budget. Like before like being able to like look at the budget of a company. So obviously like that is an earlier requirement before you can address that.
Yes. So we got a question, another one from John about Bitcoin. He's saying it's up 16% in the last month. And how do you feel about its future? Um, yeah.
Yeah. So I mean, Bitcoin is a tough one. So like here's what I would say. I would say all the following things. The first and what I always say is like until cryptocurrencies have transparent options, leverage, whatever markets where you can basically see where all the institutions are making the bets, it is way too risky of an investment for me to invest in individual coins or anything like that. I invest when I do in block. It's BLOK. It's like diversified crypto blockchain. That is what I would recommend anyone that would want exposure should invest in because I have all the following problems with Bitcoin. Like everybody actually says there's better protocols, like Ethereum is an improvement, but like my talented engineering friends, most of them say that like Ethereum doesn't even solve all of the problems that need to get solved. So the problem with like Bitcoin is that like it's kind of similar to like Nvidia, where it's just like it being the leader is very much way priced in to its price, and you have a lot more to lose with it than you have to win. That's just my view. And like, would I say it's likely that Bitcoin is the main cryptocurrency going forward? Of course. But there's like things with these stable coins, like there's things that in terms of like, Ethereum is definitely like more functional and Matic, like being like, is actually helping it be, even more easy to build, kind of new applications with. Um, so so yeah, there are things that like Bitcoin is just like not going to be used for long term, but if it is like the coin, it very well could be. But I just think like, it's like the Ray Dalio lesson we were talking about last week, where it's just like investments are riskier and harder to profit from when everybody has the same information as you. And everybody has information that like Bitcoin's the most obvious one. So I don't like I don't really love um with the non-transparent options markets, obviously I don't love, but I don't love really exposure to any coin as a result of basically what I'm saying. Whereas I think it's new. I think it's kind of like I look at as the equivalent of like investing in like Netscape, right? Before like the browser wars were figured out, or like AOL, right? Like everybody like AOL was the dominant force, but that doesn't necessarily mean it was a good idea to bet on AOL forever. And I'm not saying Bitcoin is AOL. I'm just saying that, like, traditionally, I don't go all in on industries, products, anything like that that I think are in like the early days of something. But like in terms of like blockchain is definitely going to be around long term. Cryptocurrency is definitely going to be around long term. Do I feel comfortable betting on any of them? No, I think that's gambling, and I would not like even think about like these like levered bets on it. That's like batshit crazy. Um, but yeah, I think there's still a lot to work out. But if you want to own it, like not like with this increase, now's not a bad time to buy some block if you have faith. But I think block is much better to buy than Bitcoin.
Do you think it's interesting that it's up 16%? I'm kind of surprised by that. In the past month, it's kind of been pretty bearish. The fact that it's up 16% is a little weird to me.
Yeah, looking at Bitcoin, like looking at the reasons, the many reasons it could be running. Um, the first and most obvious is like some positive news on some regulatory hurdle that's going to come through the pipe. Like when I see that kind of move, that's the first thing that I wonder about. That some people know about that before it's happening, and they would if they have inside information on like the machinations of securities negotiations and like the fact that Bitcoin is anonymous. That's another big problem with it. Like you can't have some people like making these big bets when you have like inside information on it and like there's no real way to stop that. And that's like another massive problem that I have with it. But, there could be that. There could be like one of the things that I always say about like cryptocurrency is um it's kind of like the most volatile, most speculated. So like if what I've said about this the whole time is that Bitcoin is going to start turning around when people are satisfied that rate cuts are at least incoming. Like whether or not they're there. Like I may be like a few meetings away from the rate cuts, etc. So I do think that it could be that. Like Powell could be like people are expecting bad earnings to come, and then Powell like give better guidance on when the rate cuts might start, and then we see Bitcoin start to go up like a lot more. That it could be. But that's the thing. Like people also just like, and this is what I talk about in the options markets. People also just like speculate so much on Bitcoin. People could just be like taking it for a momentum ride right now, and nobody knows when the rug pull is going to come. And without transparent leverage options markets, you have no way of knowing that, and that's why I don't really touch it.
Yeah, so before I spin into our macro topic, I just want to thank everybody for the questions and encourage people to do it because I love when we get them because we can address exactly what your concerns are or questions are. So I feel like we provide good value for the viewers when you ask questions, we're able to answer them. Um, so the last topic we have today, so if anybody has any other questions, feel free. But the last topic we have is a macro topic. The percent of subprime auto borrowers at least 60 days behind on payments rose to 6.11% in September, which is the highest since 1994. Seems like a very bearish thing going on in the economy, which we've talked about credit and all this type of stuff before. So, do you have anything to say about that?
Yeah, it's been coming through the pipe. We've been talking about like the credit crisis, everything. But like for those that don't know, I've actually worked on the mortgage side like a lot, and I would say like on the credit side, like a lot. Of my first company, I did a lot of cash flow predictions for everything from corporate loans, mortgages, like college loans. One of the more interesting forecasting problems I've ever worked on. But yes, what a lot of people don't know is actually people stop paying their cars last because that's their way of like their car is like their way of getting to work and their way of making money. So car defaults are a huge problem. And it might actually mean that maybe mortgages are underreported or whatever. Like I think we started to see some trouble there on the defaults. But yeah, like car defaults are a huge sign of trouble. So like I'm very worried about that in terms of how that could affect especially consumer spending. And like sometimes it isn't a mystery, right? We're talking about how people are like bearish around, even though like there's talk of like a much lower chance of these rate hikes. So like everybody's like looking at the same data we are. Like yeah, that could be a big concern, and everybody could say, man, there's going to be a lot of pain that we're going to start to feel, especially in things like consumer cyclicals, which are kind of the first thing to go when people like say can't even make their car payments. So yeah, I'm definitely like that is a concern of mine. Like where I do warn people is to be like, oh, like car payments are down. Like maybe let me go short a car finance company. Where that's risky is like they might have been shorting that car finance company for like the last 2 months because they expected like this news to come out, and it could be like we're bottoming out on these defaults and heading back in the other direction. Granted, like I'm not saying that, I haven't looked at that data that closely myself, but that is something to say that like we always talk about this. Like don't think just because you heard something here or like people have started to talk about it that they haven't known about it for way longer than it entering like the general conversation.
Yeah, so actually, it's funny that you brought that up because I was going to ask you, should you be like bearish on car companies and that type of thing now because of this news? But it's almost like, as you said with the Ray Dalio thing, and we've mentioned it now, like by the time you know the news, everybody knows the news, and it's not even news anymore.
Exactly. And like it's certainly like that's not to say like all the time. I've like done good like long-term short plays where I'm just like, okay, a lot of this might even be built in, but I think it's like going to keep getting worse. Like nothing wrong with that. I'm just like, you know, when we talk about having an investment thesis, your investment thesis should be more than just like, oh, bad news, cars, like I'm going to buy you need to like make some effort to determine if like the car company you're thinking about or the car finance company you're thinking about, is how much of that price, how much of that like worry has already been built into the price.
Yeah, so that our topics are done for the day. So maybe we have a few minutes as we wait and see if anybody has any questions. Maybe I'll just set you up with this while we wait. So I'm looking at the FedWatch tool now that we were looking at before. 98% no change in November for the Fed. But what's interesting is by December of next year, what I'm looking at now is there's a 95% chance of them easing as of right now. I know these things change all the time. But do you think that's interesting that like the market is so confident right now that we'll get easing by the end of next year?
Yeah, I mean, honestly, the more interesting numbers are like these March and May ones to me, where there's like a big spike from like March to May. Um, that to me makes me think that like maybe people are expecting like two bad quarters in a row, you know, where like by the time we get to next March, they're saying like, oh, well, we're gonna have face some pain and like people will be ready to ease by that. That's what that forecast says to me. Um, but the year timeline, I don't know about that because like I don't think there's like necessarily like big learnings to take away from that because like everybody knows that like we want to get that rate down. Like America runs on low interest rates and all like big booms, all of that. Like that's what's gonna like that's what fuels like lending and new businesses and growth. Like so yeah, like everybody knows we want to get it there. So that's like not a bad general bet. And like that's the kind of thing that like it's reasonable to say that even if like inflation is more persistent than we'd expect it to be, that there will be efforts to like start thinking about like how we can balance the cuts and that because like as Powell says all the time, these cuts these hikes take a while to hit the economy. So, even if it's like a bit of a tough call and inflation is just like not falling as fast as people want it to, we might like it's not a bad guess to say that like America is going to start doing everything it can to start easing to limit like the ultimate economic impact because as much as Powell is like taking a hard line on inflation now and the conversations like the American economy and the stock market is obviously what makes this country run and like it's going to turn the opposite like he's only saying that because the stock market is doing surprisingly well and the economy is doing surprisingly well. That's the only reason he's taking that hard line. The second that isn't the case, his tune is going to change a lot.
Yeah, I agree. I agree. And it's all going to happen within the next 6 to 12 months. So we'll be live streaming the whole thing and we'll be up to date as everything is unfolding. If you don't have any closing remarks, George, I think that's it for today.
We can wait a minute or two for questions and then get out of here.
I think
um
tomorrow after the market is the big day for tech. I'm pretty sure here, let me look right now before we leave, but I think there's
we should look that up for sure. Are you looking it up? Should I?
yeah, I'm looking it up.
I'm just
Tesla's
looking at
really
the earnings
been
count.
reacting bad after their earnings last week, huh?
Yeah. Um, yeah, I'm looking at Tuesday. I didn't see anything really today. Um, yeah, Microsoft, Google. Yeah, this is actually good. I might close out all of my like a lot of these positions before that. But who knows? I kind of want to do that. I kind of want to play those events. Um, and maybe if I just play all of them. Um, but it's gonna be tough. Yeah, Coca-Cola tomorrow, Visa. People like Visa is going to be an interesting one with this credit stuff. um I don't know if they're the first big credit card company to report. But yeah, that's what I got my eye on tomorrow. All right. Well, we gave everybody their couple minutes for questions. Um, Thanks for coming, everyone. That's all. If
Yeah,
we don't have anything.
we'll be back Wednesday at 3 p.m. and you'll get to see what George decides on with his closing segment. That's a fan favorite. So see everybody then.
Thanks. Bye.
Bye bye.